Hello everyone, my name is Lawrence and thank you so much for watching this channel. A channel talks about investing in the stock market and also talks about financial independence. If you're new to this channel, please consider subscribing such that you don't miss other videos like this. So today we are going to be talking about Safaricom half-year results. If you're not aware, or if you're aware, recently Safaricom released half-year 2024 results, and a lot of people, investors, non-investors, have different reactions. And personally, as the person who is invested in Safaricom, I want to be sharing with you the Safaricom and what I make of these results, whether I should be selling my company or I'm going to be buying more of Safaricom. And before we share this, I'm going to be reacting to different or showing different news outlets and how they reported this Safaricom results news, whether it's positive or negative. So let's start by sharing the news outlets. So I will start with this is Reuters. Reuters, it says Safaricom trims forecast on Ethiopia's bill depreciation. So bill is the currency that is used in Ethiopia. So let's go and highlight. It says half-year EBIT grew 31%, but expected to ease. So EBIT means earnings before interest and taxes. It says also net income fell 17% year to year due to bill depreciation. Ethiopia operation will take another year to break even. CEO says remains confident on Ethiopia success. This is Reuters. So let's go to CNBC. Basically, it reports as the same as Reuters. Let's go to Business Daily, which is actually, this is a Kenyan company. It says Safaricom half-year profits falls to 28 billion on Ethiopian currency hit the same. So let me read the outline. Safaricom's half-year profit on to September 2024 has fallen 17.7% to 28 billion from 34 billion due to depreciation of currency, the bill gain. So let's go to Bloomberg. What does Bloomberg say about the Safaricom? It says Safaricom first half profit drops as Ethiopian bill permits. Again, bill. Profits drops 18% on impact of Ethiopian currency devaluation. Let's go to another Kenyan newspaper, kenyan.co.ke. It says Safaricom half-year revenue grows to 81 billion, strong service performance. This is reporting something positive. So these are the basically different reports reporting on Safaricom, but the main common thing is bill depreciation. I believe, let's read through the, I'm not going to read through the the CEO or words. You can read through, because normally they are always pushing positive picture, even if the picture is gloomy. So I will show you. You can pause the video and read through. Maybe what I made sense of this was from Adil Arshad, chairman of the board. Maybe I can read through, because some of them they make they have a message with a in Ethiopia, the foreign exchange regime reforms, although with great long-term gains, consumers and businesses, including Safaricom Ethiopia, will have to bear the short-term pains. We are mitigating the impact of bill depreciation by renegotiating foreign currency dominated contracts, onboarding local suppliers, and reducing expatriates on rationalizing prices, long-term sustainability. So here is giving you the solution to the bill depreciation in the meantime. So let's read through the figures. What do they even mean? So when you go to the first, in reporting, we have like 3 reports. We have balance sheet, we have a statement of cash flow, and also the financial report, which is income statement. So this is the income statement. So it says service revenue 179 billion from 159. You can see this is very good improvement from 159 billion to 179. It means the service revenue is still going up. So if you go to these ones, I don't read through because these don't have any much meaning, but the most important thing, service revenue, you can see the total is 189. Another thing to pay attention to is other operating expenses. So other operating expenses, you can see they increased from 37 to 60 billion. This is a very, very, very big figure. So we need to wait for the report and see where other expenses really went to. So this is another thing to read through. So we have the earnings before interest, tax, depreciation, and amortization, or in brackets EBITDA. It's 75 billion from 79. So you can see also it did reduce, definitely because of what we have read from the bill depreciation and also the other expenses. So the profit EBIT, earnings before interest and taxes, for it slightly increased, but nothing significant. So when we go to profit before income tax, definitely it has reduced from 46 billion to 33.8 billion. This is a very, very big difference, and it at the end of the day, it affects profit after tax, which is from 27 to 10 billion Kenyan shillings. This is a very, very, very big hit of around 68% of the profit has been reduced. So what made the reduction? Definitely other expenses, bill depreciation, all those ones contributed to its reduction in profits. So the earnings per share also reduced from 85 to 70, 0.70 Kenyan shillings per share. So other comprehensive income, this is the elephant in the room. I think you heard every newspaper was reporting about bill depreciation. So it says exchange difference on translation of foreign operations. That is, when you see in brackets, means negative 148 billion from positive 119 billion. So basically, it depreciated by almost over 100%, and this is the main negative from the currency depreciation. So giving us total comprehensive income for the period, which is negative 138 billion. So from the income statement, there are like 3 main things that I get from. Number one, there was increase in service revenue. Second, of course, income before tax also reduced, and also profit after tax has reduced by over 68%. Then also the income, the basic earnings per share, it also reduced, and also because of the bill depreciation, total comprehensive income has reduced to negative 138 billion. So this is what I got basically from the income statement. So let's go to balance sheet. For balance sheet, it has a lot of things, but for me, like 4 to 5 things that I take. One is the inventories. Inventories, you can see, if you see that the inventories are reducing, it means the inventories, the materials are moving to the telecom company. This is a good thing. But if you see it is increasing every time, especially to the telecom that is always moving electronics, the materials, masks, those things means this is something positive. If it is increasing, it's not a good thing. Another thing that I always look for is and trade and other receivables. It has reduced. If it is increasing, it means it's a good thing. And also have to read through what kind of trade receivables. So you can see it reduced. It is not a good sign, but it reduced slightly. Another big thing is always looking for net cash and cash equivalents, because this is most of the time the cash that is in operation, which is very important. It reduced by from 22 billion to 29 billion. Another thing, so basically these are like the 3 things I look for: inventories, trade and other receivables, net cash and cash equivalents. Those are the things that I always look for. So if you go to the total assets, 483 billion from 69, so it means the total assets also have reduced from last year to this year. This is not a good sign, but as half year, we shall wait for the whole year to check the picture, and also when the report comes out, we need to see where the problem is, then we can go ahead and conclude. So share capital, nothing to, because most of the time it's always the same. So let's check for another thing that I look for is total equity. It also has reduced by almost the 130 something, which definitely gives you the whole picture of the depreciation thing. Then let's go to liabilities. Liabilities is also another important part where we need to look. I also look around 2 things. Number 1 is borrowings. Borrowings, you can see from 45 billion to 38 billion. The moment the borrowings are decreasing, this is a very positive sign. The moment borrowings are going up, it means this is a negative sign to the company. Also payables, when it is also increasing by big margin, it's always because this is a money that we have, the company has to pay. So this is something, a good figure that you should always be looking for. But if you can see it is increasing, it's not a good sign. But also we need to look into the picture, and I mean into the whole detail, whole report, and see what are the payables, because this is most of the time it's always a short term, and which is not a good sign. So this is basically what I can look into. For the assets on the side, they look okay, though they have decreased, but because of the trade and other receivables, net cash and cash equivalents looks good. For the on the liabilities, you can see borrowing, they are okay. We also need to look into non-current liabilities, because they reduced. It's a good sign, but we need to look into what are non-current liabilities, because there are also long-term borrowings that are not showing. So, but since it also reduced, this is a good sign. So basically that's what I can look into, the liabilities. But let's go to another side of the reporting, which is statement of the cash flows, the third part. The cash flows also, I will not go much into it. You can see here it reduced from negative 51 to 24. This is the net cash used in investing activities. Let's go to the total cash and cash equivalents at the end of the period. It's a positive 20, 29. We had looked it into also the balance sheet. So this is a good sign. So I don't normally read through the most of the wording, because it's always painting positive picture, even if it's not a good one. But let's read through the highlight of the reports. It says, we are pleased with our performance in half year 2025 despite the various challenges faced in operating environment, including floods, economic disruption, and foreign exchange reforms in Ethiopia. Again, foreign exchange in Ethiopia. Our group service revenue grew to 31% to 179 billion. We had seen it also in the income supported by M-Pesa. So let's go to business review in Kenya. Voice and messaging. Voice revenue grew by 4.8% to 40 billion. M-Pesa, which is their biggest earning contributor, M-Pesa revenue recorded a strong growth of 16% year on year, 77 billion, which is a very good amount. Let's go to mobile data. Mobile data revenue recorded a strong double-digit growth to 20%. This is also a good picture to 13.5. Also, let's go to fixed service and wholesale transit. Fixed service and wholesale transit revenue grew by 14% to 8.5 billion. Let's go to net income for Kenya, which includes company performance and Kenyan-based subsidiaries, grew 14.1% to 47.50 billion, supported by robust performance across all service lines. So we can see the Kenyan subsidiary, which is the main business, performed very well, which is a good thing on my side. But the main elephant in the room is business review in Ethiopia. So let's go to, I also read through Safaricom Ethiopia recorded 4.10 billion in service revenue, excluding international accounting standards, 29 impact in the period and over 60 million active 3 months customers. So which means these are the active customers in Ethiopia over the period of 2 years that have been operating. I think this is a very positive sign that the customers are growing over and over. So mobile data now accounts of 77%. This is actually very, very good, contributing to 3.2 billion. Actually, if you know or you don't know, Ethiopia has a very big diaspora, which means most of the families are always using data to communicate with the diaspora community outside Ethiopia. The reason I believe the data is very, very highly used, which is very good, and I believe it will continue to increase the moment also the network coverage in Ethiopia grows. So let's go to another positive thing is M-Pesa now has 88.3 million registered customers, 33.2k active agents, 6.7k active Lipa na Pesa merchants, and closed the period of 0.2 billion. The revenue is still very low for M-Pesa, but you know, when something is new and is starting, people are always pessimistic about it, how it works. But I have 100% belief the moment it keeps on growing, the more people grow in confidence using it, M-Pesa is going also to be a game changer in Ethiopia. And myself, I have a belief that this business Ethiopia, the way I look at it, is going to be even bigger than Kenya, because Ethiopia has over 100 million people. If most of the people are using this service, definitely it's going to be a game changer. Let's maybe the highlight here: service revenue, EBITDA, EBIT, net income. You can read through. You can just pause a bit and also read through if I'm going too fast. Kenyan business, as I said, it's very, very good, but for the Ethiopia is still struggling because of the bill or their income depreciation. But highlight, we saw that 6.1 million. They are active in a 90-day, and also 6.6 GB per mobile data user. This is something very, very good. M-Pesa has a total registered M-Pesa customers 8.9. So you can read through and you can see the population coverage. It has almost 46%, and they project by 2030 the whole country will be covered. And when the whole country is covered, I believe Safaricom is going to be making a lot of money within this period. So you can see about the employees and mail, and so basically this is the highlight of the Safaricom. So what is my take on these results that are coming from Safaricom? One, Safaricom is still doing strong, especially on Kenya subsidiary, and when it comes to Ethiopia, it was one thing that affected the whole results, which was bill or currency depreciation. And also I read somewhere, as you read somewhere, it will take 1 year to do what we can call to bring back or to maintain the profitability in Ethiopia. And if you're following Safaricom, the Safaricom share price has gone down to 15. Of course, it has reflected these changes. The new subsidiary, it is affecting Safaricom income, and also it has also borrowed a lot of money because of this subsidiary in Ethiopia. So at 15 shillings per share, should I be buying? Should I be selling? Actually, from the results I've read, I have nothing to worry. What I do, if I have more money, I will be buying, because at 15, I believe it's a discounted price and it keeps on going down. I'll keep buying because I believe in Safaricom long term. If you're buying for the short term, you definitely will be disappointed, because these results show you in a short time there is not going to be any solution. So if you're new to this channel, please consider subscribing and also hit the bell notification, because I'll be sharing more of investing within the East Africa, Uganda, and Kenya mainly. Those are the things that I'm going to be sharing. Once again, have a wonderful day. Goodbye.